Guys, it's Wednesday, November 26th, 5:23 a.m. Central Time. Grain markets are mixed this morning. December corn futures up a quarter cent at 4.23 3/4. January soybeans down 3/4 cent at 11.24. December Chicago wheat down 3/4 cent at 5.26 1/2. December Kansas City wheat unchanged at 5.13 1/4. December spring wheat unchanged at 5.80. Couple of housekeeping notes this morning. Tomorrow is Thanksgiving. We'll be off, of course. The markets are closed. Friday, we're taking a day off also. Much needed day off, Mackenzie, right?
Oh, definitely. Yes.
The markets are only trading 4 hours on Friday. We don't think it necessitates doing a show early Friday morning. So that's the story. In other news, our push toward 30,000 subscribers is underway. We're going to do it before the end of the year. We picked up like 400 yesterday.
Nice.
So as soon as we hit 30,000, I'm going to stop begging you guys for a little while. So if you have not hit the subscribe button on YouTube, hit the subscribe button. Our goal is to hit 30,000. All right, let's get into the news here. China buying more soybeans.
Yep. So since Tuesday, Chinese buyers have booked an estimated 10 to 15 cargoes of U.S. soybeans worth roughly $300 million. The purchases follow President Trump's call with Xi Jinping, during which Trump urged China to step up its purchases, and Xi largely agreed. All cargoes are slated for January shipment from U.S. Gulf Coast terminals and Pacific Northwest ports.
Okay, so the business was probably done. This reporting, Reuters, Bloomberg, when they report this stuff, it's generally factual. The only thing in question is the numbers. Was it 10 cargoes? Was it 20 cargoes? I heard as high as 20 cargoes. For the purposes of our soybean purchase tracker, I estimated the purchases yesterday at 12 cargoes. And once the flash sales are reported, which could be today or Friday, we'll kind of refine this. So I'm estimating now that China has bought 22.2% of the White House 12 million metric ton target that's supposed to be done before January 1st. So they're moving in the right direction, certainly. Perhaps the frustrating thing now to the farmer is that the market isn't moving on this. It rallied. We saw a sharp rally in the soybean market when this all started and when the rumors started. And now we're just trading kind of choppy. I think we may be going back to reality to some degree. The flash and the shock of China finally coming back to the market in the United States, that's kind of worn off. And now we're in a situation where China's bought 2 or 3 million metric tons of beans from the U.S., right? In a normal year, they'd have 10 million to up to 25 million on the books by this point in time. So we're still way behind where we would normally be. And I don't know exactly what it's going to take in terms of additional demand to maybe revisit that high up at 1170, this January soybean contract. But the market clearly disinterested in what happened yesterday. To look at a corn chart really quick, we've drifted a little lower in this D's contract, and I'll be flipping my stuff to March next week. First notice day is Friday, which means that if you're a farmer holding a December basis contract, you're going to have to price or roll it. Maybe you already did it, but certainly by close of business today. And a lot of times that period preceding first notice day is associated with some lower prices. Sometimes coming out of first notice day, you'll see a little bit of a bump in the market.
On Tuesday, Treasury Secretary Scott Bessent said that U.S. soybean exports to China are right on schedule. According to the Trump administration, China has agreed to purchase 12 million metric tons of U.S. beans by January and 25 million metric tons annually over the next 3 years. While China has not yet officially confirmed these volumes, Ag Secretary Brooke Rollins indicated earlier this week that official confirmation is expected within the next few weeks.
So yes, China is buying soybeans. Are they right on schedule? Depends on your definition of that. Here's some statistics with some dates. The White House fact sheet that included the 12 million metric ton before Jan 1 target. That was released on November 1st. At that time, there were 44 business days left until January 1st. About 39% of the business days until January 1st have now passed, yet China has purchased, again, about 22% of the target. So the mathematics of it would say that they're actually not on schedule. They're about 17% behind schedule. As I mentioned yesterday, I think that if they catch up, and I don't know if they're going to catch up or not, if they do, it could be very fast and in larger amounts. Like they need to average, I forget what the number was I wrote this morning, 300 something thousand per business day in order to hit the target, right? It's not going to work that way. It's going to be like, if they're going to do it, there's going to be bigger sales and there's going to be days with no sales is probably how it's going to work. So Bessent, soybean farmer, Scott Bessent, he's got he's leaning in the right direction, I guess. He's not totally factual with his stuff, but what politician is these days,
On Tuesday, multiple sources reported that Ukraine is ready to move forward with a U.S.-backed peace framework aimed at ending the war. However, several key sticking points between the two countries remain unresolved. U.S. officials are scheduled to soon meet with both Russian and Ukrainian officials to continue negotiations. The original 28-point U.S. plan, seen as favorable to Russia, has been revised to 19 points, and input has been included from both sides. Russia has not yet confirmed its agreement to the revised framework. The timeline for a formal deal and the final terms remains uncertain.
Okay, there's a lot to this story. We care about the grain market implication to this story. Let's do that by looking at a chart. Here is a monthly continuation chart of Kansas City wheat. Russia invaded Ukraine in February of 2022. The market rallied sharply. It peaked in May of 2022. We have now been, I would argue, in bear market territory for 41 straight months, despite the ongoing war. I have read everywhere, if there's a peace deal, this is going to be bearish. Why would this be additionally bearish? Somebody please explain to me why an end to the war would be additionally bearish. Look at this. Russia and Ukraine wheat exports. Wheat exports, generally speaking, have been higher post-war versus pre-war. Are they going to all of a sudden export even more wheat when the war ends? I just don't see that. I don't see it as being additionally bearish. If you think I'm crazy, maybe you're right, and you can let me know.
If you guys haven't checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
Fan favorite and financial media celebrity Jim Urio, who's a regular contributor, was on yesterday. We talked about the AI bubble. Maybe it's a bubble. I don't know. Maybe it's not. Everybody seems to think it's a bubble. Does that mean it's a bubble? I don't know. Rural real estate was another thing that we touched on. Rural residential real estate. The prices there have outpaced city centers, and it's some interesting stuff on that. We did operating loan renewal best practices with Jeremy Dutch earlier this week, and this is great stuff. It's renewal season. You're going to have the meeting with your banker. What's the best way to proceed? That's what we discussed. Chris and I did budget updates for 2026 corn and soybeans. Doesn't look great. Prices or production cost rather ain't coming down a whole lot, but Chris went into some specifics. And there are some things that you should be aware of. Matt Bennett and I did DIY premium pricing as it relates to 2026 corn. You get the call from the grain buyer, the elevator processor. Hey, we're going to do a premium pricing deal for you. You can do it yourself in a futures account, but there are pros and cons. And we ran through all of that and how the fees are structured. That's probably the most important thing for me is how the fees are structured, but a lot of other things also. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. Give that deal a shot this morning, guys.
The CFTC released another commitment of traders report on Tuesday as it continues to work through backlog data. For the week ending Tuesday, October 14th, large money managers were net sellers of 54,000 corn contracts. The net short position of 188,000 contracts was the largest since the first week of July. Funds were also net sellers of 1,000 soybean contracts and 15,000 SRW wheat contracts on the week. The net short position of 111,000 SRW wheat contracts was the largest since mid-May. The CFTC expects to be fully current on its commitment of traders data by late January.
This is so stupid. Anyways, in the private groups estimated at yesterday's close that the funds were still net short corn to the tune of 100,000, 120,000 contracts, somewhere in that neighborhood. Net long soybeans to the tune of perhaps 120,000 contracts. And that's the big thing that will stick out to us perhaps when this data is actually revealed. Funds are probably still net short 50 to 75,000 contracts of SRW wheat. So that's kind of where we're sitting here. I don't know why it takes them so long. I don't understand it. Don't get it, but whatever.
USDA released another outdated catch-up export sales report yesterday. For the week ending October 9th, net corn sales were reported at 52 million bushels, down 41% from the prior week. Net soybean sales were reported at 29 million bushels, down 15% from the previous week. And net wheat sales were near the upper end of pre-report expectations at 23 million bushels. That was down 31% from the previous week. Mexico was the largest buyer for the week across all three commodities.
Again, what are we doing? Why are we so late? I have reason to believe that the book of U.S. corn export sales is the best on record. I have reason to believe that despite the ongoing Chinese purchases, that the soybean book is probably one of the worst that we've seen in the last 10 or 15 years. And I have reason to believe that wheat sales are probably pretty damn good relative to the last 10 years, but we don't know for sure.
Bank of America has warned about credit risks in online betting and prediction markets. The financial institution believes the rapid growth of online betting and prediction markets is causing consumers to take on too much debt and contributing to a rise in loan defaults. Research indicates that in states permitting online betting, credit scores tend to decline, bankruptcy rates increase, and more debt ends up in collections. Prediction markets have recently surged in popularity, letting people place simple yes or no bets on everything from elections to sports games.
We've discussed this topic a couple of times, and my opinion is that online sports gambling is a cancer on society. And I say that in the same breath as I'll say this: you're a free American. You go out, you work, you make money, spend it however the hell you want. In theory, if you want to go gamble all your money away on Monday Night Football, then you should be able to do so. The problem is this: there's a couple of problems. There was a study done by the University of California, San Diego. They examined 700,000 online gamblers, people that betted. Over a 5-year period, only 4% of those people were profitable. This is not a situation where you're going to go make a whole bunch of money. The bigger problem is this: the sports books, your DraftKings, your FanDuels, they are engaged in what I would call some shady practices. These sports books, they routinely limit winning bettors. So if you start winning money, they're going to flag you and they're going to restrict the amount of money that you can bet, which makes it's just not a level playing field at all. If you're a losing bettor and you bet a lot, they're going to slap you with a VIP tag, and they're going to have people reach out to you with special offers and bonuses and all sorts of nonsense so that you lose even more money. There are regulators in a couple different states, New York being one of them, that is going to try to make it illegal for the sports books to limit wagers solely because a customer is successful. So there's a lot of problems with this. If it was a total level playing field and the odds weren't stacked against you in the way that they are, I don't know that I'd have a problem with this. But the way that it's being done now, it needs, I hate to say it, it needs government regulation or oversight. I don't like saying that, but it's so damn crooked, and you're getting scammed, especially if you're profitable, which I know is very few people. But in any case, what did cattle do yesterday?
Cattle futures actually held it together yesterday. Live cattle were only 20 cents lower to 307 higher. Feeders saw gains ranging from 210 up to 425. Box beef prices were mixed. Choice was down 40 cents at 370.90, while select was up 42 cents at 355.93.
Stock market's up a little bit this morning. The S&P's up 19 points. The Dow's up about 60. Treasuries are mixed. Crude oil's up 20 cents at 58.15 in the January WTI. Everyone have a wonderful Thanksgiving. We are off the next couple of days. We'll be back on Monday. We'll talk to you then.